Watching Master Trader Live, a market analysis and education to help you make money in the markets. It's live on YouTube. Trader Live. Here, Shameless.
Welcome, everyone. Welcome back for those of you that join us every Wednesday. Master Trader Live. Today, we're going to talk about dumpster diving. Kind of a funny title, but it's about beating down stocks. And we've been doing this for, well, I guess pretty much forever. In a different way, a little bit. Like we've always done what we call climactic setups. These are a bit different where they kind of settle down for a little while. It's a little bit of a different pattern. But it's been working. A lot of things have soared in a crazy way. Having fallen so sharply in a short amount of time and then making that V type of a bottom and moving up. And one of the tools, so to speak, about the catch-up trades or dumpster diving is, stocks that underperform, money rotates into underperformers. Now that could be from one sector to another. It could be stocks within the same sector. The laggards that haven't participated, money rotates from the strong into the weak, and they form patterns. Right, we're price pattern traders, and as they form those patterns, as they begin to bottom, sometimes they can lift up for a while. So we're always looking for opportunities. Risk is measured by money management, not necessarily by the pattern, but patterns suggest the probability of moving in one direction versus another. And that's what we're interested in. So at times we trade just normal buy setups, breakouts, breakdowns, continuation patterns, and we do a little dumpster diving, right, into the ones that catch up, that didn't participate. So let's review those. If you have questions, as always, throw them out there. Dan and I are happy to answer and help you.
Awesome. Afternoon. Yeah, and Greg, this is a very timely subject because the market rallying so much, and we wrote it in the intro to today's session of saying, look, the market's retraced almost 100% of this, and you're feeling FOMO if you weren't aggressive on the bounce, which we were, fortunately. But regardless of what the broader markets are doing, we always find something compelling to trade because, I don't know, I'll say there's 1,500 liquid stocks. Something is always setting up where, as a day trader or swing trader, we can find opportunity. And it just so happened when we were scanning, we were saying, well, the markets are up 15 bars at resistance. I'm surely not buying that. And we find all these trades, and then that led up to us doing this timely session today. So this is our technical approach. We show this slide all the time. Price is king, setup. I say no setup, no action. We don't even consider it anymore. And what I mean by setup is, Greg mentioned it in the intro. These are all pictures of bullish setups on any time frame. Now, because we're dumpster diving today, we're not going to be talking about all of these because these could be in trends, et cetera, et cetera. We're going to be, if I had to say, probably breakdown failures, W bottoms, 1, 2, 3 continuation, bullish gaps, reversals on support. But you don't get the
Dan, you know what? I'm surprised I haven't thought of this all the times we've been doing these, but one of your favorites is rounded bottoms.
Absolutely.
And we don't have a rounded bottom here.
Well, because I told you this slide is beautiful with 9, and we trade 20 patterns, and that's the answer. So yeah, we trade a lot more than this. There's not a Climo on here. There's not a breakout other than this gap on here. So yeah, I know you're, kidding, but that was an honest answer too.
Right.
Right. So anyway, so we take that pattern, and then where is that pattern in the location of the time frame you're trading? Is it on support? Is it showing relative strength? What do multiple time frames show? What are the broader markets doing? We've still been bullish, waiting for this turn day, which is difficult. So we'll still trade very bullish patterns. We like the broader markets to obviously support them, but we just have the saying, we're going to keep riding this bull, but have your eye on the exit door. That's all. And then we start tightening stops with our position and money management.
Dan, one of the things that kind of may lead, I'm just, thinking here as you're talking and what we've been doing, but as time goes on and we have a harder and harder time to find these dumpster trades, I think that would be another indication that the market is really getting tired, because if money is rotated into the junk, into the dumpster, and we can't find more, that's probably a good indication that we're near the end of the bull move.
Good point. And you and I know the answer, but why don't you answer the following question for viewers? Because you said it in a conclusive manner. But why does money rotate into junk if it is junk? Why don't they keep it parked on the sidelines, wait for a pullback in the Qs or the fangs? I mean,
Right.
why?
Two answers. Value investors, and then at some point values begins to outperform growth, which it has lately. And the other thing is just technicals. People just see things that are extended and they become, fearful as to, hey, this thing is extended, it's gone so far, it's likely to pull back. That's logical. And then something else hasn't participated and it forms a pattern, and that lifts it up.
Right. And I'll just add one more, which is common sense, particularly if you're a technician. And I grabbed a lot of these charts over the weekend, so there could be a couple more up bars, but it doesn't matter for today's conversation. But the spiders are up another couple days. So the common sense answer is, why do I want to buy something up 15 days in a row when this little dog Ford is just breaking out and we have this huge price void? So that's just another answer there. So and every time you see an alert like this, this is Telegram. Well, this is Telegram, where we are sending an update. So these are all trades we gave subscribers, and this is a closed trade because of the format it is in the members area. So Ford was a catch-up trade. Once we had this wide range engulfing bar right here, we always use the term, the tail. This is a climactic buy setup. When do I feel confident, reasonably confident, we're never 100%, that it's not going down anymore and I have a tradable pattern? Well, wide range breakout, red bar. What's it going to do? 180 reversal. Now I have the confidence. We trade stocks and options. We on directional trades, and we sell them also, calling a short-term top or bottom, but we buy call options as a directional trade if they're liquid, because we get the benefit of leverage and limited risk. So we bought the in the money $9.50 calls, and the value of these calls go up as the price goes up, because that's what they do. It's a derivative giving you a right to buy the underlying. And so this morning moved up to just about $11, which was our target. And I just sent out this alert, sell for $1.34, 86% return on capital. Take your money. Thank you, Mr. Ford Dumpster. We're off to the next trade. This one, KRE, is the regional bank ETF. Now, this one, we sold options. We said, well, I'm not as comfortable, going long on this one because it's still underperforming. And you can see the reason the spiders is here is just to show you how these both have underperformed the broader market. So this one we just said, look, on this gap breakout, and it was a 1, 2, 3 intraday. That's when we put it on. We just sell this out of the money put spread and collect the premium and manage in between. So that's what we call an income trade. What do we got here? The Qs, SMH, which is semiconductor sector, strong, but not as strong as this. This one went through the 50 and through this prior pivot. This one didn't. So that's a relative strength observation. Greg, can you explain what the hell Intel's doing down here at $20
In the dumpster.
and not rallying with the Qs or the SMH? Why?
Nobody wants to buy it.
Right. So it's a dog. But that's today's session of finding opportunity with dogs. So what this one, we also bought call options, leverage and limited risk, breakout of a bottoming pattern, climactic buy set up weekly. So that's our multiple time frame concept that supports this. Bouncing a little. I don't know how much this dog's gonna bounce, but we bought over the high of these two bars, stop under the green bar and manage in between. Well, we did close this one out on a bounce. You can go get a current chart and using options, 45% return. Another dumpster dive. So Greg, here's your buddy playing in the dumpster, looking for the next Intel or Ford. And you kind of
Those
said,
look like your sneakers, Dan.
the guy stole them. Thanks for observing that. So Greg talked about it in the intro there, but we're going after the laggards and strong sectors. If something just looks like it's on a death trend, the stock and the sector, I'm not interested in that. I want them lagging in a strong sector where they're playing catch up. Weak dogs remain dogs, but even those can bounce on the proper setup. That's what we're showing you today. And there's just different flavors, bottoming patterns, shock patterns, gaps. In Greg's video the other day, this is really important. So we're going to focus on these swing dogs that we want to daily. But this go down one time frame, which is a 65-minute, and a nice tell that we want is a bullish hourly or 65-minute base. So that means it's a bottoming pattern, it's stabilized, it's been crushed. And the fact that it has an hourly base and is breaking out, by definition, is saying that the pain on the daily has stabilized. Every trade we take, we need a price void, which means look to the left. Recall that Ford and Intel. And there's insignificant resistance for the dog to bounce. This is a trade we're still in. Bottoming pattern. Every one of our daily charts are this simple. Red and green candlesticks, color-coded volume. We have the 20 is blue, 50 green, and red is 200, which I have covered up here. So this thing's been beaten down. And the 20, if I were to move this, is way up here somewhere. But it's a bottoming pattern. breakout failure, got slapped back down. Greg always says that's what happens with bottoming patterns. So we're waiting, went up, green bar. Man, I got another red bar. When's this thing going to turn? Very next bar, we call this a bear sandwich, closing breakout. We bought a half lot. This is an open trade, buy a half lot. There's a description. Now in red here, the next day, I'm saying, look, now we have our 1, 2, 3 continuation. Buy the back half over the trigger of that. So remember in the slide of 9 pictures, there's 2 of them here. One is a 180 reversal or a 3-bar reversal, and the other is a 1, 2, 3. So those 2 patterns are in this bottoming pattern is our trigger.
Yes. You know, I like to draw things, Dan, on these charts. So explaining what we're doing here, I know it's on this slide, is that these little dots that are on there, we call them pivots. Some people call them, or platforms call them fractals. And it's just a bar with 3 lower highs to the left and right. So we can just follow the trend. So what Dan was referring to before, when I talk about bottoming patterns, is that part of their characteristics or attributes is that once they violate the trend, and we define that by trading above the prior pivot high, that's prior to the lower low. So that breaks the downtrend. And it looks like they often look like they're going to go up. Sometimes they're really powerful how they come off the lows, but they often come back down and they retest. So these retests give us, and recoveries give us, the confidence that the bottom is in and it's okay to go in the dumpster and go grab the money.
Nice. Here's another one. This girl found some more lost shoes. Downtrend, 20 below 50. Here's a couple false breakouts.
There you go.
Gap negated. Bottoming tail. Red bar. The red bar suggested lower prices. Now I have a gap, wide range close breakout. We did well. Actually, I gave this as a directional long, but it actually gapped up and kept going, so we missed it. But we in this day, you know, anticipating the continued breakout, there's a description, wide range breakout, bottoming pattern at the 2050. Weekly chart, I have a W bottom with a void. You see how both of these, they have room to go up, and because there's insignificant resistance here. So this one we shorted naked puts, the 19.5 puts. I said you can also do the 19s. And because of the bullish move last Monday, we just closed them at 4 cents. I said bid 4 cents. Sold them for 21. So that's like over 80% of our max value. We just held it over the weekend. I know it says 4 days, but it was entered Friday. We were out Monday. Took our money off to the next dumpster dive. BLO, we're still in it. Greg, you like to say same but different. Let's see what's different here. Downtrend, breakdown, 100% retracement of this breakdown. 4 inside bars. So it's not going lower, not significantly lower. This was earnings. So it had a gap breakout on earnings, but it closed with a topping tail. So we didn't do anything. The next day, bullish engulfing, closing breakout. Now it's ready. Look at the weekly. This is not we don't call this a W bottom, but it was a climactic buy setup. We call this a new low reversal. So this weekly bar is this 5 days of selling on the daily chart. And it closed back at the high. This one, we bought calls again. There's the technical setup, and we're still in it. So we're managing this one. HUT, this is in I have it here. The WIGME is the miners, which we also have an open trade in WIGME. There's another option selling trade. So this one's stabilized after a climactic buy setup. This bar closed with a topping tail. So it's, all right, what's it going to do? Inside bar, I don't know. If it can now take out the top of this topping tail bar, it has a void. You know, we're dumpster diving. My target is like the 50 MA. It's not, these are 1 to 3 day trades for the most part. Weekly chart, void, bullish reversal on support.
That's why I drew in the box, because that pattern, right? The pattern is one concept. The location of the pattern is another concept. And then looking at individual bar by bar, what are they doing? Like this gap down reversal. And then, you know, Dan pointed out the topping tail bar with the little gold star there, and then it went inside. So you start to put together more and more of these concepts that define the probability of prices stopping to go down, and at least in the short term, starting to move back up.
Dumpster diving. We're still in this BZ. Big old rounded bottom, as Greg was asking me earlier. It's a big rounding bottom, closing breakout, climactic buy setup on the weekly on major support, bullish reversal. You calculate position size, buy it over the high, and manage in between. I say first target is the gap fill, so around 16 bucks. See what it does. So we're still in that one. AMPH. Now, I don't call this one a dumpster dive platform on the daily, but I do on the weekly. But let's start here. So I'm assuming this was earnings or other positive news, because otherwise you wouldn't get a big old bar like this. But, you know, just for education, I typed this out. You can read it on your own, of why this was such a powerful WRB. Remember, we were talking about tells. This red bar didn't go lower. It gapped up and was negated. All of these consolidation is in the upper 50% of this. Closing breakout, inside bar is my master trader 1, 2, 3. I have multiple time frame alignment, another W type bottom, new low reversal, closing breakout, price war. See how much, Greg? We've been here 25 minutes, and look how much they've learned already.
I hope so. They're listening. I know they are.
All right, same but different. Wolf. Now, I grabbed this chart just an hour ago, so this one is current. Bottoming pattern, but bottoming pattern with a rising 200 and rising 50. It just got creamed in the short term. Gap reversal, bunch of inside bars, closing breakout. We bought, again, call options, limited risk and leverage, wide range breakout, 1, 2, 3 on the continuate on the weekly, which I'm not showing you, but multiple time frame alignment, bought these calls, sold half, 69% return in 2 days. And then I just said, just go into trail mode. So I think I gave 30-minute low this morning. So the back half, we're managing things tighter with a possible turn in the market. 70% return just for a 3-day swing trade.
Surprised, Dan. I was surprised that this had the liquidity in the options being a cheap stock.
Well, liquidity is more related to volume than price, than cheapness. And it had, and so that means people like to trade this thing. It's a, I forget. I think it's another one of these miners, Bitcoin mining things. So, got a bounce and a bunch of them.
Sure.
All right. Why do I have this old dog here?
Gonna die?
Yeah. Look at the title. Just because something is cheap is not a buying opportunity. Somebody might say, well, Dan, it used to be 160. Why can I not buy it at $3?
And I remember I used to think like that, meaning many years ago, it's cheap, something that was, so you figure it's going to go back up. And that's the greed part, with the psychology of, hey, it's cheap, it'll probably go back up. And then you start learning about patterns like that we refer to as death trends.
I mean, everything we've been talking about for the last 30 minutes is pattern, right? Pattern, void, tails, etc., multiple time frame alignment. There's no pattern here. This isn't a nasty, nasty, nasty downtrend. He's an old dog that is not a dumpster diving setup. So that's why I wanted to show you that dog.
Do you see Hugo's question there?
All right, so Telegram, obviously, we've been talking about. I just added these this morning. Ford, we took our money. Oh, because I showed you Ford earlier of when we entered. So see the bounce here? We entered on this green bar, remember? It got close to our $11 target. I tightened the stop this morning, 30-minute low. And we stopped out for a nice gain. This one, KLG, Greg found this yesterday scanning. Looked fantastic. We bought it today. And actually it went up to $18 already. So, already it had a nice move. 1, 2, 3 continuation breakout from a bottoming pattern at the 20, 50, and 200. Catch-up trade right there in the Telegram. And that's why I got this little guy. Catch up to the sector.
You really put some time into this one, Dan, with these little pictures.
I know. Catch-up trade.
Mm-hmm.
That's what we're going to do now. Greg will pull up his chart, as we always do, but we purposely wanted to save more time today for scanning. And, I grabbed this. He did a video the other day telling people about today's section. So I'll just wait till we get there. And why don't you tell them about this? You came up with this great offer.
Right. Let me answer Oscar's question. He says it means you're anticipating the 1, 2, 3. We don't anticipate the 1, 2, 3. It's obvious to us that it's done 1, 2. We anticipate the 3 bar, that it's going to trade above those highs and going to go higher. So the 1 and the 2 suggest that it's going to form a 3 bar. And so every pattern that we talk about is suggesting it's going to do something. It's going to go up, down, or sideways. And so a 1, 2, 3 suggests bullish 1, 2, 3 plus 1, 2, 3 suggests it's going to go up. And then that is just one, I keep using the word concept. The 1, 2, 3 is one concept. It's not actionable unless it forms a pattern in a certain location that puts the odds in our favor. Yeah. Okay. So go to the next one, Dan.
Yeah.
And so this I put together, and several reasons why it has this. This course, if you're brand new to Master Trader, that one gets you started, gets you up to speed real quick. Then you get the swing trading course. That's lifetime. And this is lifetime. And you can watch them as much as you want, as often as you want, come back and revisit it, so on and so forth. Then the letter that we've been showing you, 30 days of that advisory letter, it'll renew after 30 days at the regular cost, monthly cost. So you can do the annual and significant savings. Updates, Dan showed you the what happens in Telegram, what happens in the member area, everything's updated as the trade progresses. Raise the stop, take the money. Sometimes you stop out. Dan does updates at night, on the trades, new trades for the day. The advisory letter gives you broad market overview, what's happening in the broader markets, different sectors, the sector rotations, money rotations. And then the coaching is once a month, reviewing technical concepts, option trades, and so on. And the scans that I'm going to show you, besides other pages, I won't have time to show you all the other pages, but when you become a member, if you use TC2000, it's part of the whole package, right? That you get all of those scans and you learn how to use them, and you pretty much can always find a trade. Sometimes they're higher quality than others, but I'll show you exactly how it works. And we'll send you the last month's coaching. So a lot of education there, support ongoing, and then you got homework to do because you have to watch the courses, you have to assimilate that information, watch the coaching session, and then, of course, makes the letter so much more beneficial because when you see the letter, you know what we're talking about. So when we say, hey, this is a 1, 2, 3 at converging moving averages, you know what that means. Or this is a continuation pattern or whatever it is. So let's take a look at some examples. So at the bottom here, all you do is put swinger.
Oh, shoot, sorry.
Not you, Dan. That's not a swinger. You put swinger after Master Trader, and you can see that checkout. All right. Now notice what I have on here. Right? That should catch your eye. You know what this is. Look at the 65-minute chart down here. That's my little, I get the, where, oh, here it is. Okay. You saw examples of this. Look at it. Downtrend, 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 downtrend. Boom. Up above the pivot and rolling higher. Look at the daily chart where it's at. You should know what this means. Right? This is ETF for volatility futures. And so if this is starting to move up, there's an anticipation that volatility is going to increase, which is associated with a market beginning to pull back now. So this was kind of like a volatility crash because what the market did was insane. I don't remember markets ever doing anything like that. And I've been doing this like 30 years.
It was that and COVID were the worst I've seen.
Yeah. I mean, but the COVID didn't recover. I mean, it recovered tremendously over the course of a year. But this, this insanity recovered like what I covered, yesterday in the pre-market, 28 days. It collapsed and recovered in 28 days. After, a 10% decline, semiconductors dropped 30%, the NASDAQ dropped 16%, well, the semiconductors haven't recovered completely yet, but this is unusual. And so now you can see the little, so far, beginning to topping, but it never broke a prior day's low, not once. And you see the 65-minute here, this happened this morning, the crazy price action, which you can see down here. I've got a little 5-minute chart. You know, as this broke out and then collapsed back down again. So crazy price action there. All right. So this is one of the main scans. And so I just pulled this up. Well, Dan was speaking there, and I just clicked here, wide range bars, as you know, so this is, you know, relatively wide compared to the last several days. And so, and here's VXX, you know, just another one. And so this is not what we're looking for. We're looking for Donald Trump to win. Let's make sure that you know that the people you're hanging out with here, because we're called Trumpers. Anyway, so, you know, this came down, it was getting climactic, and you got a wide range bar up. This looks for bottoming patterns, and they tend to be messy because that's what we're looking for, you know, for credit spreads. And that is a real mess, Dan. Verizon. That might be good for a condor since it's right in the middle of the range.
Yes, typically no good premium though, but
no juice.
In the pattern, definitely.
No GE. Not what we're, so let's look at here, 52, near 52-week lows. See if we can find some bottoming action there. I don't know if you got any symbols, Dan. This one might be in development mode because energy stock, this one's been going down for a while. So think about what we would want to see here. What we would want to see here. Right? We looked at red bars ignored, breakdown failures on the slide. So if this was to flip back up, maybe, you know, if this turned into a bottoming tail bar, or, you know, since it's got a pivot down here, if it was to flip back up in the next couple of days, that's what we'd be interested in, a dumpster diving. So I'm going to set an alert up there that'll expire in a week, because it should trigger within a week if it's going to happen, I believe. And then I'll bring my attention back to it.
Well, here's two of them. DLO, we had a slide on it, and it just hasn't gone yet, but it's still fine as a dumpster dive.
Sure. So this one is developed more. You know, this is what Dan was referring to when I referred to as these bottoming patterns, where they look like they're ready to go, and then all of a sudden, you know, they kill you, or try to kill you again, try to suck you in, and then kill you, and then it recovers. So that 100% retracement recovery becomes a much higher probability that this is ready to advance. And see if it can actually do that. KLG was the one from yesterday.
Right, triggered today.
That's triggered. And we looked at this bottoming pattern on the 200. It's come down a lot. It's near, relatively close to support, but this has built an area of support with these little dots, these pivots. Support, retest, support, up, down, back up again, the wide range bar. DPZ, that's pizza. That's not ready, Michael. Now, no, that's not ready. And when you're saying triggering today, I'm not sure what you mean by that. Triggering for what reason? You know, this looks like it could go, it's trying to bottom, but it's on support. I don't know what that's going to do. That doesn't jump out at me as something that I want to get involved with. You know, it's got the support here, and so it's kind of not really a 1, 2, 3, but you know, these two bars could be considered like one big bar, but it does, you know, it just doesn't jump out at me. How much? What can I say it any differently? You know, something that's ready for prime time. Not a dumpster diver, but that looks pretty darn good.
Mm-hmm.
Yeah. 1 month channel. It's not our style, Michael. You know, kind of like, I see what you're talking about with this channel, but we don't draw diagonal lines. We look at everything horizontally. So while this is really a weak stock and could go lower, and it could trigger and go down, maybe, look, I don't know if the options are liquid, but, maybe buying a put, we'll see. Well, you've gotten my interest. I'm going to set an alert and we'll see if it breaks that low and what it does. Whereas I really prefer this to kind of come back up and start to roll over again, because you can get in near resistance instead of getting in right on support. That's a pretty terrible gap down. All right, let's see if we can find some others. So it's another energy stock. Look at the volume from yesterday. Maybe this is, and it's right near that low. Maybe this might start bottoming. I had to look to the left to see if it was near some support. Not quite yet, but that volume caught my eye. Vince is asking about Tesla. That's not a dumpster diver. However, here is where it was of greater interest. So as this began to bottom here, that red bar being ignored would have been, but that's, different than a dumpster diver. Where these are all 52-week lows. We already looked at that one. These just aren't ready. This one, maybe getting close. There's nothing to the left there.
Wow,
Yeah, it's on a pivot.
$250.
Yeah, it's on a pivot down there. It's not resistance. It's just not really ready yet. This is a little better. You can see the rounding bottom. Let's look at the 65-minute there. Yeah. Here we go. That's a bit better. And just ignore the moving average. This came down hard. It popped up. There's a bottoming tail bar. This is where bar by bar analysis is such a powerful concept, in combination with everything we've been talking about. So this could, I mentioned to you yesterday about this as a possible put spread, but
Correct.
Yeah. You can see the rounding bottom, and here on the 65-minute, it's very, very clear. This could have continued to advance. It takes a little time, Roberto. So one of the ideas, as far as ignoring a moving average, is to look to the left and see if it's aligned with something significant. And then moving averages, remember, are subjective. Even though, we're using them on a regular basis, they're subjective. Because if I change this to a whatever, like if I was to change it to a 10, just give you an example of how it can change your perception and your beliefs. So anything that is subjective that can, influence your belief, you have to realize as such, because now I made it a 10-period moving average. It's not there. And now you think, okay, yeah, that can go up. You see how powerful that is? Whatever you put on your chart is going to create a belief. So you have to know that some of the things that we use, and I'm saying it's subjective. I could change it to an exponential and maybe it's underneath, or whatever. You got my point. It's kind of a dumpster diver. If it could clear these highs, it could certainly start to move up. You can see it's stuck right at that pivot. That's more of a 1, 2, 3. I wonder if that's in the 1, 2, 3 scans. And there's lots of scans in here, folks. I slid this over so we could see more of the charts. You see, these are plus 1, 2, 3s. Interesting. That's not even a good one, but these are made to not be too strict. These are 180s. So here we found kind of a dumpster diver there.
Sure.
It doesn't have the void, but it's probably good for a put spread.
I'll look, sure.
Yeah, I mean, look, institutions are buying the dips. Now, this might need to develop a little bit more, but remember, this thing, I don't think it ever split before it did the split right here. And you can see the little mark there, it split 50 for 1. And so this, you know, goes through corrective modes, but it always seems to come back over the years, right? It's Chipotle. So institutions, look at that volume. This is not day traders that created that kind of volume. That's institutions. So that gap down, it went down near the pivot and exploded right back up again. This would be maybe even, Dan, to sell a naked put on this,
Sure. Yeah, we will.
you know? So different patterns produce different beliefs, and there are different vehicles. So this is not a directional trade yet. It's in development mode. But doing a put spread or selling a naked put, if you want to own this, and because it's, you know, a strong stock, institutional sponsorship, of course, you don't mind owning this down at, you know, $50 or $49 or what have you, waiting for it to develop. You know, you lower your cost by selling that put. And by definition, they put the stock to you. So are you doing a speculative income trade? Why I don't believe it's going to go down there, or are you willing to own the stock? You got to make that decision ahead of time. You have, this is in the advisory letter, Dan, and not as a dumpster dive.
Oh, correct. We have the directional and put spread, right?
So I put the link in there for the advisory letter, folks. So even if, you know, you don't want to get the courses, which is an amazing deal, you can get a trial to the advisory letter or do the 2-for-1 special that is on that link. All right, let's see if we can find some maybe bearish ones. Not really dumpster divers, but maybe things that are rolling over. And so here we have Citigroup that collapsed. And another concept is relative strength and weakness. If we compare this to the ETF XLF, this is showing relative weakness. So this is up at resistance and a 50 MA. It's getting a rounding top. You can see on the 65-minute, and market is beginning to weaken. Could be a call spread. Looks like it could start to pull back. Here we go. So these are bearish 180s. You see minus 180, bearish 180s. This is another bank. So this one is a bit better. Think about what makes this better. Tell him, Dan. I mean, it's a rising 50, but look at how it came down.
Yeah, and breakout failure I like too.
Yeah. It tried to move up. You can see here. You know, it looked like it was going to go up to fill the gap, and now it's come back down again. It's on some support, but it's weakening. So again, these scans put you in the ballpark of what we're looking for. Again, these are bearish 180s. Now, wow, that's a nasty today, huh?
No kidding. And look on volume.
Yeah, that's an accident. But these are range expansion 180. There's none in there. So they would be like wide range bar reversals there. Minus 123s. That's closer to support. Here we go. That's a little, there's XOP. This is yesterday in the green room. We were looking at these reversals and put on some trades there.
Yeah, I
So
got it.
So Mike, I think it was Michael. Michael, this is more along the lines of what we would be looking for versus that other one that you pointed out. You know, where it collapsed, it's come down, minor resistance, wide range bar, inside bar. So bearish 1, 2, 3. You can see the volume from yesterday. So where this went up in a manner that has very little support underneath it. And you can see on the 65-minute, this topping pattern, and that it has room to fall. So we
And
like
Greg,
that.
yeah, no, I
Mhm.
got an alarm on that already, but look at what I just typed, because that's good to go. It's in the weekend letter, under $12.
Yeah. So this one has plenty of room to fall. And look, without indicators, and those of you that have been in these MT lives or student, you know we don't use indicators. But we look at price patterns that suggest to us what other people are doing. And so one of our sayings is that price patterns are pictures of others' beliefs created with money. So technical analysis is a self-fulfilling prophecy, meaning that support and resistance are areas where there were buyers and sellers before. So an area of support marked as a pivot is where we anticipate buyers will show up again. Well, they did show up because it stopped going down for a few days. But when it tried to go up, it came right back down again, which suggests institutions continue to dump this even though it's already down considerably. So there's a lot of supply and they're getting more aggressive. So if this breaks, it's that what I just explained to you suggests it'll go lower because it couldn't go up.
Greg, here's a dumpster. Fizzler's on my list. I got an alarm at 228.
Hmm. You've got this still not used to this thing as long as I've been using it, Dan, this drawing tool. You saw this before. No, I didn't want the box. I wanted the line. Look, you saw this
Yep,
in the slide.
yep, head and shoulders, yep.
So now, if it can clear that, it could be heading up this way. It's a solar stock.
And weekly, monthly supported.
Yeah. So let me clean that up. Do this. So the weekly, and you can see that's on that support there. And this is one of the main, solar has been like the biggest dog, with this whole Greendale, but this is not done well at all. Maybe it's starting to bottom. We'll see. All right. What else can we look at here? Stocks close to a moving average. There's a weekly chart. So the 20 MA is equal to the 100 on the daily. And so this is your weekly chart. So if I was to put a 100 MA on there, you'd see it would be around here, but this is at resistance, not what we're looking for. These are pretty messy charts. So how do I define messy? A lot of overlapping bars, wide bars, tails, gap reversals. These are the kind of, look, you can do a credit spreads on something like this or just stay the hell away from them. Right?
Yep. Stay away for that.
Yeah. All right. Yeah, thank you, Rocco. Thank you for that feedback. We love it.
Greg, it's not a dumpster, but Momo, daily, weekly, monthly, I got on my list.
Yeah, so this is above the moving averages. It had a nice advance, but look at the price action here. It's the same but different, right, Dan?
Right.
Right, it's the same but different, meaning, look, it advanced down, gap down, 100% reversal. So there are these patterns that you see maybe in a textbook or in our course, But as you start to learn all the concepts and putting them together, it's the same, but it's different. So as this doing what it's doing, does it have room to go up? Yes, it does, because of the way it came down. So what am I going to do? I'm going to set an alert up here, and we'll see if it triggers. Well, First Solar was in the bearish 1, 2, 3, Dan. But this is what I'm so glad I clicked on that,
Red bar
because
number.
it just reinforces how you have to know the multiple concepts. It's not just about it's a bearish 1, 2, 3, because if that's all you knew, you wouldn't recognize the fact that this was a breakdown failure and a deep retracement. And so now this is wouldn't be a textbook kind of bull flag, because it's not in an uptrend yet, but the depth of that retracement is a positive. So, before I mentioned about breaking these pivots, and this is the first time, look, since it's been going down here, that it violated it and broke and closed above. I don't know if it closed above, but it broke above that pivot high. So you have to understand how to put together location, candlestick patterns, relative strength and weakness, bar by bar. And of course, that's what the swing trading course will teach you. And again, do not feel that it might be too much for you, because the introductory course, the top-down course, gets you up to speed like that. And then you get into the swing course, then of course the letter complements everything that you've learned, so that when you read the letter, you understand what that is. And it's like, oh, I remember that from the course. And that you'd have a greater degree of confidence to press that button. All right, a couple more. Well, one that collapsed. That was nasty. When this is in development mode as a dumpster diver.
Sure. Okay. Weekly, Climo.
Yeah, weekly climactic.
Yeah.
Look at that move. It's just not ready for prime time yet, but it could be good for a put spread if it had premium.
That's
Look at all the volume down here.
Mhm.
Yeah. Thank you, Kim. Waiting for somebody in the social media online there to give us a little love. They're quiet. I guess they're just in awe of us, Dan. So this one could be a retest, maybe. You can see here, down at support. This would be great for a little retest that developed into a dumpster diver. You know what? I'll set an alert down there. See if it goes down there. It doesn't cost any money to set alerts. However, sometimes, things start to move, market moves, and you got 20 alerts going off. It can be kind of a pain, but you can let the computer watch for you, because you've only got 2 eyes in the green room. We've got a bunch of eyes looking for stuff and putting out ideas. So that's the advantage of being in the green room. WOLF, what was I saying? There's a dumpster diver.
But
It's in development mode, but yeah.
Right. Continue, because I don't think it's ready, but it's worth watching, but it's not ready.
So let's look at see the bottoming pattern. And this is, look, for a counter trend trade, it doesn't always work out that way. But if I can get 2 and ideally 3 bars, even on a regular pullback, 2 and 3 bars begins to form an intraday bottom. And so you can see where it attempts to go down, up, down, up in a very strong way, retest. And now, rather than pulling back so far, it's what we call bullish price action. It's going sideways at resistance. So we want to know if it takes that out, because then it might be able to go up to 15, 16 bucks. Okay? Earnings tomorrow, which is right there. Actually, tonight maybe. This says the earnings are today on the 21st. I'll keep that in mind. You're welcome, Bernard. And everybody, we'll be back next week. Consider what we've offered today. And if you have questions, email Dan and Greg at Master Trader. Very easy. So all the best, and we'll talk next week. Bye-bye.
Thanks, everyone.
Trader Live. There's how. I can share this video in your channel. For your friend who wants to learn stock market tips. You can put in this for lesson. Then right to your inbox. Live every week. And subscribe to the channel and press the bell to get alerts. Join the event. Give us a thumbs up. Visit mastertrader.com. Mastertrader.com.